Okay, well, it can't be that simple, you say. Stocks might be businesses, but why must we invest in the stock market? What happens when stock markets crash? Should we try and time the market, as I've heard it's really risky and some people say the stock market's high right now? Well, absolutely. Let's tackle each of those. But I will be asking for some help from the Oracle of Omaha and arguably the greatest investor of our time, Mr. Warren Buffett. For those who don't know Warren Buffett, he is one of the world's richest men and he founded Berkshire Hathaway, a well-known investment company. The reason we build our net worth is to eventually be free to do what we want. We cannot work forever, so we need to find a way to make money in our sleep. The stock market is the greatest global system that allows us all to make money in our sleep. In addition, as Warren says here, it is a great device for transferring wealth from the impatient short-term traders to the long-term patient investors. I want us to be long-term patient investors and thus be rewarded for our patience. So it seems to make sense, but what happens when market crash? They always cause such panic and upset and people lose money. Well, let's chat about that for a second. Stock markets dip, crash or correct almost every single year. However, after every crash, the market not only comes back to where it was, eventually it ends up higher than before and continues to grow forward until the next shock or panic. The market itself has never taken a dime from anybody. Only selling your businesses, stocks, investments realizes your losses. The question should be, why does every part of me want to sell my amazing businesses when the market drops? The key to sales, just like Black Friday or Boxing Day, is to go shopping like you do at the mall or online. Crashes should be celebrated as it allows to buy all of your favorite businesses on sale. As we say here, the key is to feed your money machine to allow it to keep working for you while you sleep. So if the markets crash and things go on sale, should we try and time the market? Frankly, this is an amazing question. When things crash, people are usually paralyzed with fear when the crashes come, and they end up doing absolutely nothing. The difficulty is knowing when the crash or sale is coming, and this means usually people miss out on all opportunities because nobody, not even our friend Mr. Warren Buffett, knows when any of this is coming. One thing for sure is true, that I can guarantee Warren is always ready to go shopping on the dips, yet he is always in the market to take full advantage of all of the ups. So let me show you why he's trying to take advantage of all of the ups, but not trying to avoid the downs. JP Morgan Chase and Charles Schwab did a 20-year study looking at the stock market in the US from 1996 to 2016. The US market is called the S&P 500, which is basically the largest 500 companies in the USA. The average annual return came in at an annualized 8%, which means investors would double their money every 9 years. Pretty good, I'd say. However, in order to get this 8% average annualized return, the investor needed to be in the market 365 days of the year, every year, for the full 20 years. Well, if the investor decided to be out of the market for a while, trying to time the market, and they ended up missing the 10 best days, yes, 10 days in 20 years, their returns dropped from that annualized 8% to an annualized average of just 4%, literally cut in half. This is incredible, right? If they ended up missing the best 20 days, yes, 20 days out of 20 years, their return was actually down to just 1.57%. Yes, Missing the 20 best days out of 20 years, your return on investment is now that of current day savings account rates. Pretty abysmal. Now imagine you missed the best 30 days in those 20 years. Well, now we're losing money. Because nobody knows when we will have those best days in the market, you need to be in the market in order to catch the best. Nobody can predict a day when the market vaults higher on great news. Nobody can predict economic improvement news, unexpected job report news, and thus if you're not in on that day, it will be missed forever and the returns will be severely sacrificed due to trying to time the market. So, timing the market is not something we should try. As many people say, it's time, not timing. Get in the market and ride the good and the bad days, and you will be rewarded if you stay true to your course.